So what's going on? Today, we're breaking down exactly how to get realistic paper results that actually translate to live trading. And trust me, this is the difference between fake profits and real money. Welcome to FinTech Bot Focused, where we break down AI tools, trading bots, and everything automation in the FinTech space. If you're serious about understanding how bots actually work in the real world, hit that subscribe button because we're cutting through the hype and getting into the mechanics. Let's start with the biggest trap that catches new bot traders. Your backtest looks perfect. 90% win rate, massive returns, everything is beautiful. Then you go live and within 3 days you're bleeding money. Why? Because paper trading and live trading are playing by completely different rules. First thing you need to understand is slippage. In a backtest, you're assuming you get the exact price you want at the exact moment you want it. But in real life, by the time your order hits the exchange, the price has already moved. On a volatile asset, you might be looking at a difference of 50 basis points or even more. That gap between where you thought you'd enter and where you actually entered, that's slippage and it's eating your profits alive. Second, there's the spread. When you're backtesting, you're usually looking at mid-price data. But when you actually trade, you're dealing with a bid-ask spread. The market maker wants their cut. So instead of entering at exactly where the candle closed, you're entering on the ask side and exiting on the bid side. That difference compounds fast, especially if you're running high-frequency trades. Now let's talk about commissions and fees. Most backtests include a base commission rate, but do they account for everything? Taker fees, maker fees, withdrawal fees if you're moving money around, network fees if you're on chain. These little cuts add up. A strategy that shows 15% returns on paper might actually be 10% after all your fees hit. Here's what separates traders who actually make it from those who just have pretty backtest reports. You need to stress test your assumptions. Start by intentionally making your backtest harder. Add slippage manually, increase your commission rates, tighten your spreads. If your strategy can't survive worst-case scenario conditions in the backtest, it absolutely won't survive them in real life. Second, start small on live. And I mean really small. Take your bot, fund it with maybe 1 to 5% of what you were planning to deploy, and run it for at least 2 to 3 weeks in actual market conditions. You're not just testing the bot at this point, you're testing your assumptions about market behavior. Does it behave differently during different market conditions? What happens during low liquidity periods? What about flash crashes? Third, monitor everything obsessively. Track your actual entry prices versus your expected prices. Calculate your real slippage. Measure your actual fees. Compare these numbers to what your backtest predicted. The gaps you find are your blind spots, and they're worth way more than gold because they show you exactly where your model is breaking down. Fourth, remember that past performance doesn't guarantee future results, especially when you're moving from paper to live. Market regimes change, liquidity patterns shift, and volatility spikes can catch you off guard. A strategy that worked perfectly during a bull market might get absolutely destroyed during a consolidation phase. The path from paper to live isn't about finding a perfect backtest. It's about building a strategy that's robust enough to handle reality. Test harder than you think you need to. Start smaller than you want to. Monitor closer than feels necessary. That's how you actually build something that works. Before you go, make sure you join the FinTech Bot-focused newsletter. You'll get updates on new bots and AI features, strategy breakdowns, my honest takes on what's actually working, and early looks at new automated trading tools. Plus, you can reply with video topics you want covered. The link is in the description, so join the community and stay ahead of the automation curve. One quick disclaimer though, this video is for educational purposes only and is not financial advice. Trading, especially automated trading, involves real risk. Always trade at your own risk and test everything thoroughly before you go live. Thanks for watching, and I'll see you in the next one.